Welcome to Passive Wealth Principles, What I Learned episode with Cody Bjugan. Cody Bjugan is a friend I actually met several years ago. The reason I connected with him is he does something similar to what I used to do, or really work with an organization that did the same thing. So Cody does land entitlement, dirt. And actually, I think he's coming out with a book called Dirt Dog Millionaire, or maybe if that's maybe his working title. But what it is like taking dirt and assembling it and mapping it out to create a subdivision. And so for people that don't know this, is land development takes this idea, several parcels or a ranch or farmland or something like that, and then they envision something else into the future, and they turn that into a community, a subdivision, or an apartment complex, and you have to entitle the land and change the use of that. And so that's what Cody has done or become known for. But really, how he got started with that is a very interesting story, is that he grew up in a small town in Oregon. And, some people have mentors and their parents that teach them what to do. He said, hey, his dad was someone that taught him what not to do. And he wanted to do a lot of the things that the opposite of his dad. And so he did and crafted his own life to be a little bit of a contrarian to what was his growing up. Well, in high school, he got his high school girlfriend pregnant. His high school girlfriend got pregnant, so then he needed to, get health benefits. And so he joined the flooring union. The flooring union was where he could get health benefits the fastest. And so in 3 months, he could get a health plan to cover and help, for his new baby, birth, and take care of his family. And through the necessity of caring for others, he was required and needed to get into something of trading his time for money. He was ambitious. As a tile setter in the flooring union, he was able to start growing his book of business, and then owned a store. And then from owning a store, he was able to connect up and work with all these different home builders and contractors. And at some point, he just decided, as he was making some money, that he was going to go buy some land. And then from buying land, he started doing more of it. And he got a mentor and a real estate agent that was guiding him in that process. And so what they did was, they would buy and land and title and then sell it to the home builders. Well, that was tremendously successful. And in the 2000s and early 2000s, when he started doing that, in 2002, 2003, 2004, and I'm kind of leading, and some people know this, is that in 07, 08, there was a massive collapse, and Cody was not immune to that. So he was doing these land entitlement projects, and he was taking them down. He was buying them with cash, leveraging them to fix them up, or to put these architectural and engineering and design developments of these projects, putting them together. And then what happened is when the market turned, he was massively exposed to no longer having buyers. Nobody was buying dirt. Home builders were not building homes, so home builders were not buying lots. And since nobody was buying those lots or those homes, it required, and a lot of these companies went bankrupt. And he even talks about that, some of his friends, that as they got bankrupt, some of them committed suicide. Some of them couldn't handle the high peaks and then the very extreme valley lows. And, they were over levered and they were going to have to file bankruptcy. And, that is unfortunately one of the stories that I've heard several times through people in the real estate industry that then lose these massive amounts of wealth, is they would just rather end it all than to deal with the repercussions of the pain of going through that wind down. Cody, I don't think, had those thoughts, or maybe he did, but it was, at least did not come together in that episode. But what he did is he started drinking. He started, trying to drown his sorrows. And fortunately for him, he was in two markets. He saw Boise, the market in Boise, correcting before Portland, Oregon. So the cluing in, at least he got a several month head start on starting to liquidating his portfolio in Portland. And that was at least put him in a position that he was able to leverage out or sell out of these projects before the things got as bad as they ultimately did. And so even though he was just drinking a lot in his 2010, 11, 12, kind of in the very, very depths of the Great Recession that we were experiencing, he started selling off some of his assets, his house or his cars and other things like that. And he did some things that I didn't know was criminal, but it's called, structuring. And it's a way that criminals embezzle money and put it back into the system. And he didn't know this either, but he would make deposits, cash deposits under $10,000 at multiple banks. Well, that triggered the attention of the FBI and the IRS and other people like that, even though he had, it was after tax money. He was not eluding taxes. The way that in which he set it up and structured it was illegal. And so he was then facing the potential criminal charges. And that's, he dives into some of those stories, and it's unbelievable that, it's just like things that you don't know that can come after you and potentially derail you. And so what that does is that was a hardening of him and creating and making a warrior out of him. And then ultimately, like, how can he take and restructure and start building upon those past mistakes and the market correction? And then he started really developing a new way in which he invests into land deals that don't expose him to the significant downside risk of an unentitled project until his approvals are in place. And so he started, doing these deals to where he would essentially option them until he was completed with all the entitlement risk. So instead of buying it, taking it down for a low amount of money, he would share in some of the upside with these land owners and say, hey, I can buy it at this higher price point, but I can't do that until I get it all approved. And then what he would do is work with these same home builders now that in 2015, 16, 17, 18, the market's back, the home builders are buying houses or lots to build houses on again. He would get commitments from them, and he knew that if he was going to develop something with 100 lots, that the home builder was going to buy those 100 lots from him. And so he really was de-risking his entire business model by optioning and then getting the approvals in place. And then as soon as he got the approvals in place, he would sell it off to the home builders. That then created a way to have almost like infinitely scalable operations. And so then when he would make millions of dollars on one transaction, that it wasn't paying off debt, it was just transferring that to the owner and then also to the home builder, and he was making a spread off of that value. He was still committing a couple $100,000 of entitlement work and other things related to that. And then he also teaches people how to do those deals and how to structure some of them, that some of the forward commitment, the buyout would cover the cost of developing those plans and the in-between. And so really he's done a significant and a unique way of structuring land deals that I have not seen from almost anyone else in the country. And it was incredibly fascinating to see his story on that. And I think it is just one of those things that, like, his trials led to him adapting and creating new ways to solve and de-risk his future investments. And now by, putting in a CEO into his organization, he's now also like, how do I leverage out my time? How do I get people that are better at this job than I am in the right seats of the bus? Because he's like, to be honest with you, I was holding the organization back because of my own limited time or focus on some of these deals. deals, or I was scared of bringing on new employees because I didn't want to hire them or train them, or, even go through the hiring process. And then now, once I was able to put in a CEO, that all sped up in 10x because I was able to get away from that aspect of needing everything to pass through him. And so now he's triggering on some next levels of his life. And this is one of the things that I see as a common theme of a lot of the people that I interview, is when you start getting out of the day-to-day grind of your business, is now you can start looking at fulfillment. Is your impact and your purpose or your legacy, or what is it that is beyond you, that is not just about making money? He's got a saying about believe, action, and faith. And that, you need to get through some of these levels, build this faith, build trust into people. And then how can you do that is establish trust is by being transparent and then showing, some of the flaws in which he has, discovered. And so it's just one of those incredibly fascinating episodes that I went and re-listened to it again. And then, like, a land deal is not a diamond until it's done. Like, it's the process of it, the smashing of it, the figurative or literal way of a diamond is formed is through pressure. And so that pressure and that land development is not complete until those approvals in place. And so then how can they create those mechanisms? And then he's able to make 300 to 500% return on his investment in these short time periods. And like a 300 to 500% return on your capital is amazing and tremendous, but obviously has some very niche specialized skills that also have limited scalability onto what he can do. And then he can create these and create land value or value of something that's worth a higher and better use than what he's doing. So I encourage you to go check out this episode. I mean, he talks into some more details, like how making $5 million on one deal that he had only $250,000 into. Like, that's tremendous returns. And that's obviously an extreme, and we're highlighting the extremes of some of these deals. Not all deals are like that. The one out of probably hundreds is to that level of making $5 million off of a $250,000 investment into the entitlement process. So these are very unique, always thinking of creative ways of trying to solve these problems. And it came from a necessity of, how do I de-risk this investment? How can I speed up, trust? How can I, control some of these things of just not giving up and letting go and surrendering into the process, and then sharing some of those books and lessons that he has learned, and flexing on that faith muscle. So go visit Cody Bjugan, and not only what he's doing, but listen to the full episode, because I'm honestly still marinating on how much I learned from interviewing him and then even listening to it again. And I'm excited to talk to him again in the future and hang out with him. And I think this is a fantastic episode for you guys to listen in to some of the interesting and intriguing ways in which he has created and solved some of these same problems that we are all facing of leveraging and getting out of our own way. This has been another episode for Passive Wealth Principles, where cash flow is king. Stop trading time for money and build your passive wealth machine so that you can live a life of legacy, purpose, and freedom. Thanks all.